It is time for money, power, politics. And Donald Trump has officially signed an order hiking tariffs on steel and aluminum to 50%. In a statement posted to X, the White House claimed the tariff hike will, quote, provide greater support to these industries. But the OECD warns that all of Trump's tariffs will cut U.S. growth sharply. And guess what? Increase inflation. My friend Dan Nathan joins us now. He's a CNBC contributor and co-host of the Risk Reversal podcast. And Charlotte Howard is here, executive editor and New York bureau chief for The Economist. What is your take, Charlotte, on this OECD report? And I want to be sure we're talking all tariffs, not just aluminum and steel.
So the OECD came out with a revision of what they expected this year's economic growth to be for the United States and for the world. So just earlier this spring, they expected it to be 2.2% for the year, now 1.6%. That's a pretty dramatic decline. And what's the reason for this decline? It's the scale of Trump's tariffs and the uncertainty that surrounds them, right? And so I think the question with Trump always, and we've seen this just in the past week, another reminder, is what does he say he's going to do? What will he actually be able to do? And what's the effect of all this? And there's, a big gap between 1 and 2 and what he says will be the effect and what actually.
And that's sort of the thing, because one economist said this downgrade proves that the economy is going to just suffer until we get any sort of clarity on what he's actually going to do.
Yeah, and so our economy is likely to suffer before the rest of the global economy,
yes.
Right? So if you think about that, just on the steel front, if we import, let's just say $30 billion of steel that goes to manufacturing, it goes to auto, it goes to construction, if he's putting a 50% tariff on that, that's $15 billion that those industries that we just talked about, those companies have to absorb that price increase. It's a tax for all intents and purposes. So when you think about that, if that holds back manufacturing of autos, if it slows construction, right, all those sorts of things, that means that, speaking to what Charlie just mentioned, you will get a slowing economy given the uncertainty of what also is tariffed, what's also taxed around the world.
But this one is tricky with aluminum and steel because unlike socks and sneakers, we do produce those things here, and our producers have suffered because of super cheap aluminum and steel that come from other countries. I'm looking at you, China.
Yeah, but this is also a president, when he was building buildings, was importing most of the steel, from cheap places like China and the like. Right. So, at the end of the day, I think that, these things likely get rolled back. It's a negotiating tactic. If you think about where a lot of the steel comes from, it's Mexico, it's Canada. These are countries that have not come to the negotiating table. I think they don't know what the administration is looking for. But I think it's also interesting that they feel somewhat emboldened, right? And if you look at it through the lens of the stock market, and I know maybe a little CNBC here, we are 3% from the prior all-time highs. We're just about 5% from those April 2nd highs. We know what happened after April 2nd. Stock market crashed. Now it's come all the way back. If you were to look at the Canadian and the Mexican markets, they have well beyond where they were trading on April 2nd. So I think through the lens of the market, I think investors are suggesting that Canada and Mexico and the EU, for that matter, are going to be much better off than we will be if in a protracted bear market or a protracted trade war goes into effect.
Can we talk about the negotiating table, though? If Donald Trump keeps backing off these tariffs, if the 90-day deal leads to no deals, isn't he destroying his own credibility? And basically giving the other side the upper hand? How many times can Scott Bessent tell us this is all part of the negotiation? If it's part of the negotiation, show me the beef, dude.
Yeah, I think that there are two ways in which this whole game of threatening other countries and promising benefits to the American people are hollow. One is on threatening the other countries. He says he needs to bring all these countries to the table, that he's advancing these deals with various trading partners. He doesn't have that much leverage, as you pointed out earlier in the show. Just last week, we had his authority called into question by federal courts, right, whether he is overstepping the bounds of what a president can do with the reciprocal tariffs. And then, on the question of what the effect will be for the American people, I think that the steel and aluminum tariffs are a really interesting example of both the campaign promises that he made, specifically to Pennsylvania, which historically, of course, is the heart of American steel, and how hollow some of those promises are. Because, yes, you might save some steel jobs, but then you're costing other parts of the American manufacturing sector who make use of steel and aluminum. So there are these conflicts that just he can't resolve. And I think it's becoming apparent to both his trading partners and to voters. You see his approval rating declining, that these promises are hollow.